Q3 broadly conveyed three key messages to investors, and these messages should help shape medium-term expectations. Firstly, the recovery keeps on unfolding. This is getting clearer and clearer as economic data is gaining momentum. Second, central banks have explicitly stated that they intend to keep the term structure of rates lower for longer. The change in the objective of the Fed is a meaningful pledge in that direction. Thirdly, in June, hedge fund managers showed only small overweight equity position, and the chart shows their beta increased significantly since then. Sentiment has normalized across the quarter. Q3 was supported by both macro and sentiment elements. Not all of these elements will make it in Q4. We think it is essential to make a difference between mid and short-term perspectives. On the mid-term side, two elements will be supporting growth assets. First, the recession is behind us, while in our opinion, economists and analysts are underestimating the extent of the recovery. The chart displayed shows evidence of this. This compares the expected yearly EBITDA growth with what comes from a regression on our nowcasters. There is a 15% gap between the two, both in the US and in Europe. We expect this gap to narrow, helping equities to reach higher levels. On the short-term side, the US election should be a source of volatility. Every US election is, but this one might prove to be even more volatile. Combined with stretched equity valuation and the loss of sentiment as a support to growth assets, we think we could experience episodes of market stress. We're entering into the quarter with an overweight in growth assets, and more particularly in equities. This comes from the medium-term reasons we've already discussed. Growth is solid and supported by a significant policy mix. Now we're pairing this overweight with two positions that should help bring diversification to our investments. An overweight in gold and an overweight in defensive forex crosses, such as a long JPY versus AUD as displayed on the chart. We think the combination of both makes sense at this stage, and that should help us sail these expected turbulent waters.